Hey everybody, Danny here with Danny Murphy and Associates, First Team Real Estate with our Thursday morning update. Sorry about our messy office. We got a bunch of new signs from rebranding here at First Team Real Estate. But anyway, hope everyone's doing really well. Hopefully everyone survived tax season. I know that's a little bit traumatic sometimes, especially for those of us that are self-employed. It's one additional thing to manage here at this time of the year. But now that that's behind us, we can hopefully start to enjoy the sun tax. As I say, it's expensive to live in California, especially coastal Southern California and Orange County. And so we definitely pay a sun tax, and but I don't know about you guys, love where we live, love the weather, love the beaches, love the mountains. We have so much here in Southern California that we're really lucky to enjoy and have at our disposal, from the mountains to the sea. So, but that said, on the real estate front, always changing, right? A lot going on right now. Interest rates, as you may have seen, are definitely on the rise again. And I think a big driver of that is because the Fed has basically, we've seen a lot of continued hot inflation readings. And so, and unfortunately, a lot of those inflation readings are lagging indicators. So we may not see what inflation's really doing for another couple months, but a lot of the readings are coming hot. So there's a lot of thoughts now that the Fed will not be decreasing interest rates as much as originally thought, say 3 or 4 months ago. So a lot of times they were thinking it would be 3 interest rate reductions this year. It's down to 2 or even 1 right now is what I'm hearing. And I wouldn't be surprised if there's none. If inflation keeps coming in hot, we might not have any rate decreases this year. But I'm thinking 1. That's my prediction right now in April. But as a result of that, 30-year mortgage rates have increased substantially in the last 2 and 3 weeks. So we're definitely solidly in the 7%. For 30-year mortgages, 7 to even 7.5% we're seeing. So that kind of fluctuation definitely impacts sort of buyer demand and all that. But what I think has also happened is, it's been about 1.5 years of rates above 6%. And so I think buyers have realized that, they need to still, buy a home, and sellers need to sell, and people move, and people graduate and have babies and pass away, and so life still happens irrespective of interest rates. And so people are kind of moving about their business, they're adjusting to the new normal, and we're seeing people out significantly. There's about 2,100 homes on the market right now. Normally we have about 6,000 homes on the market if you go back before COVID. So a lot of people there's not a lot of inventory, but there's definitely demand. Buyers are buying. If a place is marketed well, priced properly, we're seeing things sell, sometimes with multiple offers and sometimes above list price. So a lot of good things happening in the market. If you want to kind of know what's happening locally in your area, reach out to us anytime on social media, call, text, however you want to get in touch with us. We're here to help you. So thanks a lot.